Hi everyone, today we got Jerome Powell coming out and saying he thinks the stock market is a little bit expensive and the jobs market has some tough times ahead. And on the back of that news, the markets did sell off pretty dramatically. Here you can see pretty decent sell-off of around 0.75%, getting a little bit of a bounce here from the trend structure. But let's take a look at all of the charts and see if we can find some direction for tomorrow. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Fed Powell said he thinks stocks are fairly highly valued, and markets did not like that at all. They did sell off like I talked about, and they mentioned the fact that markets can tolerate higher prices and higher valuations, and that they do look at overall financial conditions as a metric, but all things considered, equity prices are fairly highly valued for current and by many measures, he said here. So not what you want to see if you are buying the stock market or trading the stock market to the long side. And as they mentioned here, markets turned lower after these comments, with all the major averages ending up in the red. And then with his other comments, he did say he thinks the job market is likely due for some tough times, and that is why they cut in this most recent FOMC. And if that is the case, these cuts are likely to be a little bit bearish in my opinion. With that move, fear and greed went down to a 58 from a 63, so a little bit of a move down. Momentum back to neutral. Strength, still no movement there, still extreme greed. Breadth has been neutral. That continues to hover at kind of a medium level. Put call ratio spiked up over the last 2 days. Interesting to see that. And then volatility here is spiking up. We talked about it spiking up yesterday. That was a little bit of an indicator of some concern, but then we did see markets hold in there pretty good until we got those comments. And now on the back of those comments, markets are moving a little bit lower. Safe haven demand coming in a little bit, and junk bond demand still in fear. Moving over to seasonality, still a little bit of a bearish period. We talked about it yesterday. This was relatively bearish in here through the end of the month, and that seems to be coming to fruition a little bit here with today's comments. Moving over to the economic calendar, still got pretty good numbers here, a little bit worse than expectations across the board, but still well above the 50 line for those manufacturing PMI, composite PMI services, PMI numbers, all pretty good there. And then looking at new home sales for tomorrow, 5-year note auction, want to see what that comes in at. And then for the Thursday, the big numbers for this week, GDP for Q2 expected to be a 3.3, need that to be a good number if markets are going to hold up. And that'll pretty much wrap it up for the week. We do have PCE data on the Friday, but I'm not expecting too much out of that. Moving over to the charts, looking at the S&Ps here, you can see it was down about 0.5% on the day, right to that trend line, still holding as support, the same one we saw here on that hourly chart, holding that trend as support. As long as that continues to hold, we will be in good shape. We are coming off of some pretty overbought conditions, so maybe that is signaling a little bit of a peak here. We talked about that on the Tasty charts, and we'll look at that in a second. But for now, trend structure holding, definitely a little extended, but holding the same kind of trend here. Looking for that upper trend around 675 would be your target in the short term, which from current price is about 2% higher. If we did get the break, 21 EMA would be about 1.75% lower. Moving over to the Tasty charts here, you can see that upper ATR band. We talked about it yesterday as being a point of resistance here around 667.22, 667.27 for today's. Hit that level and then pulled back. Is this going to start to roll here a little bit? As long as that 8 EMA holds as support, 661.02 is going to be your support. Didn't quite get all the way down there. As long as that holds, we'll be in good shape. And realistically, the 21 could be your support, 654.21 on the daily chart. So I wouldn't say anything is broken, just a little bit of a pullback. You can see we've had some choppiness in this as we continue to go higher over the medium term. So I wouldn't say anything's broken there. Then moving over to that 4-hour chart, you can see we did kind of drift off of that upper band. We were grinding along it. That was a little bit bullish, and then we pulled back here just a little bit, showing just a sign of weakness. A little bit of volume coming through on that sell. Not super crazy about that. Either way, looks like a little bit more of a pullback in time. Moving over to the NASDAQ, this one looks a little bit worse, down 0.66 here. You had this kind of rising wedge structure. We talked about it in yesterday's video, and today we did get a little bit of a break in that structure. Back below that 55 EMA on the hourly. We've seen this before. We came here, ended up rallying back into the structure. So again, I wouldn't say anything is fully in panic yet, but again, just some kind of notes of pause, momentum stepping to bearish, coming off of super overbought conditions, at a 75.76, and today we're at a 69.14. So usually not a great time to be buying. Like I mentioned, anything related to big tech is probably not the best move, specifically the SPY and the NASDAQ right now. They're probably going to continue to come down a little bit more over the next couple days. Moving over to the Tasty charts here for the Qs, you can see we were overbought here, pulled back just below that upper ATR band, 599.45 is that level, just below it now, 598.16. 8 EMA is going to be that support, 594.11, so you could still fall about another $4, and then we'll see what happens from that zone. Last time we touched it, we got a nice bounce continuation. Are we going to do that once again? That is what we're going to wait and see here. Probably tomorrow, I would guess we'll get a touch of that level. Still bullish conditions, trailing stop 583.50. And then jumping to that hourly chart, I did want to highlight that we are back into bearish conditions on the hourly. That move down did push us back below the lowest ATR band. Bearish conditions, trailing stop 602.21. Then moving over to the Russell and the Dow, you can see the Russell went up and tagged that trend line, the trend line that we were watching yesterday. Hit that trend line and then did sell off. The level was 244.46. We did get above that, and I did kind of bite on that move because that did take us above the previous all-time highs. So this is a new all-time high wick. Could be just a kind of an initial test as we get a bigger continuation eventually, but want to see how this plays out here. It's moving a little bit higher after hours. Want to see it get back above 244.46. Again, it's kind of in the same boat as everything else. Momentum's fading a little bit. RSI is definitely overbought, but it's had a nice run. It's been lagging the other major indices, so I think ultimately it will go higher. And then looking at the Dow, same kind of thesis. Wick to some new highs, ended up breaking back lower, momentum bearish. RSI still a little bit high at a 65. Moving over to Apple and Microsoft. Apple giving a little bit back, about 0.5%, but still holding above the trend line here. Still looking for that all-time high at 260.10, which is the wick high back here from December. Still think we can get there, and not expecting this to break structurally. Just a slight hesitation on the way to those all-time highs. And then Microsoft still holding the trend structure here, still holding the support at 506.71. Momentum fading a little bit, RSI fading a little bit. Still think this is just fine here structurally with a low, higher low setting up. Want to see it push to a higher high somewhere around this 526 area, maybe as high as that 538 area. Moving over to Tesla and NVIDIA. This one is a little bit less good, right? So in Tesla was down closer to 2%, fully engulfed the previous candle, gave all that back, momentum fading. RSI was a little bit expensive. 414.50 would be the support. I would suspect that we're going to come down and touch that level, and then we'll see what happens after that. After hours, it's hanging in there. And then looking at NVIDIA, this did not do what we were hoping for. Was looking for a continuation break of that 183.97 level we put on there yesterday. Did not get the continuation through there. So this is looking a little bit more like a topping pattern for me. If we can get above the level, still good to go bullish. If we cannot get above that level, that is a decent level to trade bearish off of, in my opinion. Moving over to Amazon and Broadcom here, highlighting these. We didn't talk about them yesterday, but look at this move on Amazon, down 3%. Big sell there. Momentum bearish, RSI bearish. This is likely headed back down to that 215 area, potentially 212. Probably going to go quite a bit lower, but structurally this looks bad now, right? So you have a low, lowered low with a high, lower high structure. So this is starting to move quite a bit lower here, especially moving off of this kind of all-time high. Didn't even quite get there, came up just a little bit short, so you could say high, lower, high structure here. This is probably going to go a little bit lower and be a little bit more aggressive to the downside. Not what you want to see. So just watching this one, likely to go, I would say, to that 212 level is my next level. Moving over to staples and discretionary. Staples actually catching a little bit of a bid here today, up about 0.5% off of those comments. Thought we would go at least to the 77.50 level, didn't quite get there. Did go to a slightly lower low, 77.73. Came up just a little bit short and then caught a little bit of a bounce here. Structurally, still not good at all. Still looks like this is going to continue to sell, probably just a dead cat bounce style move. And then looking at discretionaries, we talked about this kind of fading here, probably going to go to that 235.85 area. If it tags that level and bounces, that could be a nice little trade in here. But for now, I would say this is probably going to go here first before we go either direction. Moving over to breadth. Breadth actually caught a little bit of a bid here today, even though markets were down overall. You can see 20-day breadth went higher, 50-day breadth also going higher. So breadth is hanging in there. Nothing is cratering immediately, which does give you kind of a tick towards the bull side. As long as breadth is not cratering along with the sell, they're likely to get bought up. And for now, that is what we're seeing. Moving over to the dollar. Surprisingly, the dollar did not bounce at all with those comments today. I would have expected the dollar to go a little bit higher. So again, probably going to be a relatively short-lived pullback. If the dollar's not going higher and breadth is not fading, then the equities will likely get bought up. So for now, that's what we're seeing. I would say that's a tick towards the bull side for equities. Moving over to bonds here. Bonds did pull back on the J&K side, pulled back just a little bit, but after hours, you can see it's kind of engulfed all of that and headed back towards the bull side a little bit more. And then you can see that kind of risk off play from TLT. Held that 21 EMA area, got back above 89.16, so that is good. Want to see this continue to go here. I think this is ultimately going to go towards $100 all the way up here. Same spot we were back in August of 24, but for now, nice move above here. Looking for 92.82 as your next target. 96.50 would be the level after that. Moving over to the VIX. VIX is signaling just a little bit of fear entering markets here. We talked about it yesterday. We had a green day on the VIX. Despite equity markets going higher, another green day. High of today was around 17. This is probably going to go a little bit more here over the next day or two. Like I said, I think things will probably go down first before we do get a little bit of a bounce. I am still expecting a bounce, at least for now, but VIX signaling just a little bit of fear here in markets. Moving over to my accounts, I did grab some Russell covered calls, and in both accounts here, some 100 shares in both. Obviously, that did fall a little bit. I bought kind of expensive at 246. I bought it on the breakout. The expectation was continued breakout. Sold some calls against it to help protect, but not too bad on that. Ultimately, I think this will be fine. I'll sit on these covered calls. I might roll this one down and in for tomorrow for that one on the 25th, but we'll see. Probably going to sit on this for a little bit. I still think the Russell is going to continue to outperform here, but of course I'll have my stops in those zones that I've been looking at around that kind of 242 area. I think if that area goes, this could go quite a bit lower, but for now, after hours, we're up a little bit, not too worried about it. Should be in good shape tomorrow is my expectation, and then no movement really here on the dollar, just sitting on the same position. Let me know down in the comment section what you think of Jerome Powell's comments. Were those necessary? Were those comments something he should have kept to himself? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.